ETF fans. Mike here with another daily video insight. Today's July 3rd, so tomorrow there'll be no video insight, no daily note, because hopefully we'll all be celebrating a beautiful 4th of July day here in the US. And with that kind of as a lead in, I thought maybe what I do today is take a look at US allocations across the US listed ETF marketplace. Take a look at US returns relative to other country returns over the last 10 years. Look at the US total stock market capitalization, visualize how that has changed over the last decade. There's a lot of talk out there about how the US is taking up a larger portion of the total stock market capitalization of world stocks. And I just wanted to kind of look at some of those visuals to show how that's occurred over the last decade, but then also take a look at what might be driving some of those issues. So to get started, we're going to keep it really simple. We're going to go to the ETF dashboard. We're going to scroll down to the equity size and style dashboard, which is a representation of all size and style strategies, broad-based strategies targeted on broad-based markets like the US, developed ex-US, emerging markets. And you can see we bucketed into 3 composites: US, global, ex-US, and global. If you open those up, you'll see the 9 size and style boxes under the US. You'll see emerging and global ex-US strategies bucketed up. But the key point here, there's $6 trillion in these strategies across these funds. Nearly $5 trillion of that is US-based strategies. I'm going to use the charts tool to give you a visualization of that. So if I go into the charts tool, you can see nearly 82% of that $6 trillion in AUM is in US-focused strategies, US-focused ETFs. So a huge home country bias here in the US from an allocation perspective of using ETFs. That allocation, as you'll see here in a second, is much higher than the breakdown of ACWI. Nice little pop-up hopping up on my screen there. Gotta love that. So the visualization here is pretty clear, right? There's a big home bias allocation here in the US, and I just keep getting pop-ups. Apparently my WinZip trial is over. Anyway, the next thing I want to show is look at actual allocations of market capitalization, all country world index, the MSCI all country world index, to see how much change has happened over the last 10 years within the allocation of markets from US, developed, ex-US, emerging. So to do that, I'm going to go into our home office. I'm going to go to our history tool, which provides historical data points for all of our ETFs, mutual funds in our database across dozens of different data points. I'm going to pull in ACWI, so the iShares MSCI ACWI ETF tracks the MSCI All Country World Index. See, I'm on the price and return page here, so I'm looking at shares outstanding. But what I want to do is I want to switch this category into the market and size category, and I'm going to switch my data option from top 10% to the United States. So what this is showing me is the US allocation inside, US stock allocation inside the All Country World Index. I'm going to extend my time frame to 10 years. I'm going to illustrate here that going back 10 years to July 31st, 2014, the US made up 46% of the All Country World Index. Flash forward to today, and what we're going to see is that it's now making up 63%. So a huge increase in that allocation. A large part of that is domination of the US in terms of performance over the last decade. So to illustrate that, what I want to do is hop into the ETF database. So I'm going to go to our database side panel, go into the ETFs database, and I'm going to use one of my pre-built watch lists. I have a watch list that tracks all of the total market country ETFs that are the largest, most liquid country ETFs. So there's currently 42 ETFs I have in this screen. And what I want to do is I want to go to the performance tab. See, I'm looking at returns as of the close of yesterday, July 2nd. I'm going to scroll over here to the right, and I want to look at the 10-year annualized returns. And the first thing we're going to see here is the US is up on top with 12.18% annualized return over the last decade, and that is significantly larger than most other countries on a 10-year basis. Illustrated even further, I can open up my column section here, add in a 20-year column. Now, not all these products are going to have 20-year return history, but the ones that do, you'll see a similar effect. The U.S., represented by the S&P total U.S. stock market index, is up 10.15% annualized over the last 20 years, and considerably higher than most other major countries. So on that note, what might be driving some of these return allocations? We know over the last decade, it's been a story about tech. Big tech has dominated the markets. And if we isolate our database down to just 3 ETFs that track the US total market, the developed ex-US total market, and the emerging markets total markets, and use our data tab, we'll change our data tab here to sector breakdown. What we're going to find is this, and by the way, sector breakdown is a look through of the companies held inside of these ETFs, and it breaks it down by, in this case, I'm looking at the sector breakdown, the GIC sector breakdown. And what we'll see is the US has 31% in technology currently, 25% in emerging markets, and 9.51% in technology. So clearly a big factor of that US outperformance is just that overexposure to technology. One of the worst performing sectors in this time frame is financials. Financials has a much higher allocation to emerging markets and developed markets, does the US. So you can see kind of a theme here, kind of the breakdown of the economies. A big driver of the US's success is that we are a tech hub, and that technology and the large technology companies, even though they get their revenues worldwide, they're US listed stocks here on US exchanges, and they have driven that a big part of that outperformance over the last decade. And the last piece here, just to kind of think about, is if we were to look at currency effect. So I'm going to pull up the ETF UUP, which is an Invesco ETF, and I'm going to go into our performance tab. I just want to illustrate what UUP does is it tracks the return of the US dollar relative to a broad basket of foreign currencies. And as you'll see, that the US has outperformed on all these different time frames, and that currency effect has a big to do as far as US listed products, right? Products that are trading in USD, that currency effect has a big deal. And in that total return factor, which if you wanted to, you could go in and compare some of the currency hedge products versus non-currency hedge products to see that, to illustrate like, you know, what's going on in Japan. So let's just take as an example, look at Japanese ETFs. So I'm going to go in here to my database. I'm going to go into classification, and I'm going to quickly set a filter to look at just Japan-based equity strategies. So I'm going to set a filter on equity, apply. I'm going to set a filter on country being Japan. Oops, passed it. Apply. I'm going to see, okay, the largest non-currency hedge product is EWJ. So I'm going to select that. And I see there's the Wisdom Tree Japan Hedged Equity ETF, which to keep it apples to apples, I'm going to go down to the iShares Currency Hedged MSCI Japan ETF. Exact same index. Difference is they're hedging out the currency effect. And I'm going to select those two ETFs. I'm going to pull it up in my Compare tab. And let's just take a look over the last 5 years. What we're going to see is that currency hedge version has actually outperformed the S&P 500, but it's absolutely destroyed its non-currency hedged division. So that's just a quick way to illustrate that currency effect on returns of US listed products. Important to note that. But I thought today might be kind of fun just to dive into some of the home bias allocations here in the US. Also look at what's driving that greater proportion of the US stock market relative to the world stock market, going from 46% to 63% today from an allocation perspective. Look at those country returns using ETFs to see how the US has been dominating in performance relative to other countries countries utilizing ETFs that are tracking those countries. And just kind of talk a little bit about some of those driving effects. I hope you enjoyed today's video. Got some ideas on how to utilize all the different tools in our database. As always, if you have any questions, reach out to team at ETF Action. We'll be happy to set up a one-on-one demo or answer those questions on a one-to-one basis. And most importantly, I hope you all have a safe and wonderful 4th of July. And thank you for watching today's video. I'll see you all on Friday. Thanks.